Hi, welcome everyone. This is Feras Riyal with Remax at Team Feras Riyal. Your home sold guaranteed or we'll buy it. We will be starting in just a couple of minutes. Just want to make sure that everybody is able to hear me and see me and see also my screen. Please type in the chat if you can hear me clearly and you're able to see my screen. Also, I would like you to type in the chat the location you are viewing today's webinar from, like your location. Thumbs up if you are along the way liking this webinar. It's going to be an exciting webinar for those that especially that are first-time home buyers. Whether you are thinking of buying or planning to buy in the near future, this would be I hope you will get some information out of today's webinar. So again, make sure you turn your notifications on, so anytime we're going live to webinars like these, you'll get notified. And again, type in the chat where you are located. And anytime during the webinar, if you have any questions, please post them in the chat and we will try and answer them as we go along. Thanks again for joining and watching today's webinar. And our topic for today is how to stop paying rent and own your own home. So before I dive into the some of the tips and facts, I wanted to discuss about what is the advantages of owning versus renting. So the rent versus own, I've put in a few advantages of owning. One is being that the risk that your lease won't be renewed. You can't paint, remodel, or do what you want to the house without the landlord's permission, of course. And the freedom to renovate or modify your home as you wish and to your liking. Obviously, these are restrictions when you are renting. Again, also, you are paying someone else's mortgage rather than building equity of your own. Other advantages of owning is that you are building up equity in a safe, secure investment as you pay down your mortgage. The potential for rental income if you include a secondary suite apartment, and we will go into details about that. The stability and peace of mind that comes from being in control of your investment and owning the place where you live and not worry about moving or relocating when your lease is expired. I will touch base now on building up equity, and I've come up with a graph, and this is the graph of average prices of homes sold in the Toronto and GTA area over the past 10 years. So this graph is from early January 2012 up until January 2021. So this span of 10 years, as you can see, a home in January, average price of home, and this includes all types of properties. This graph includes across the GTA, condos, condo townhouses, freeholds, semis, detached, all types of properties. When you combine them together and get the stats and the data for this, we see that 105% increase from January 2012 up until January 2021. So during these 10 years, in January, for example, January 2012, the average price of home was roughly around $461,000. And within 10 years, if you had purchased in January 2012, an average, your home is worth today $946,000. So you can see the equity. And this, if I go back even 20 years, so this is just 10 years. If we go back 20 years, it's even more than that. The average is coming to around 12% per year. whereas the last 10 years, it's coming to around 10% per year. So this is about, the advantage of when you're owning, how you build up equity as years go by. Next, we talk about, want to start discussing the facts and tips that help you when you buy your first home. So there are some government incentives and that I wanted to talk about. I'm just going to mention one today, which is obviously your number one priority when you want to start or think about owning a home is save for the down payment. And this is basically what is going to differentiate you from renting or owning, because renting, you are paying actually the landlord's mortgage. Today, an average condo, 2-bedroom condo in Mississauga, for example, is not less than or around the $2,200, which is equivalent to almost a mortgage on a $800,000 property. Of course, depends on how much down payment you put, but eventually you are paying the landlord's mortgage when you are renting. So the number one thing you have to do is save for the down payment, and this is because your monthly payments are going to be the same whether you're renting or getting a mortgage. The major difference is coming up with that down payment. So how do you come up with that down payment? Of course, is by saving. And there are other methods or ways that you can get money, one of which is the first-time home buyer incentive. The first-time home buyer incentives help people across Canada to purchase their first home. This program offers 5% or 10% of the home's purchase price. And it depends. If it's a new construction, you could get up to 10%. If it's a resale residential, we're looking at 5% from the purchase price. This, in addition to your down payment, of course, lowers your mortgage carrying costs, making home ownership affordable. I'm going to just touch on an example or the criteria to determine your eligibility for the first-time homebuyer incentive. You need to have a total annual qualifying income that does not exceed $120,000. So if your qualifying income doesn't exceed $120,000, you will qualify for this first-time homebuyer incentive. Plus other criteria is that your total borrowing is no more than four times your qualifying income. So, for example, if your income is $120,000, you could the maximum purchase price will be $480,000, and then you add on top of that your down payment to be able to determine the purchase price. Other criteria: you have to be a Canadian citizen, permanent resident, or even non-permanent resident that's authorized to work in Canada. You can make use of this home buyer incentive. You must meet the minimum down payment requirements with traditional funds. So your funds or your down payment must come from savings, from the withdrawal of RRSPs, or non-repayable financial gift from a relative or immediate family member. So you are able to access, qualify using the criteria mentioned. Second fact I wanted to discuss briefly is that you may be able to get your lender to help you with your down payment and closing costs. So if you are short, and this of course has a condition, and that is meaning that you have to be debt-free. So if you are debt-free and, for example, you have any other assets such as a car, your bank can use this as a collateral or be able to lend you against that asset. So this is something you might want to think about. And the next fact, by the way, if you are if you have any questions, please post them in the chat again. If you are liking what you're hearing, please give us thumbs up. and like our page. If you have any questions, like I said, post them, and we are gonna discuss now the third fact, or a tip that can help you buy your first home. One third option is you may be able to find a seller to help you buy and finance your home. So there are some sellers that are willing to hold a second mortgage for you, which what we call a seller take back mortgage. In this case, the seller becomes your lending institution, and instead of paying a lump sum full amount for his or her home, they would be accepting monthly mortgage installments. So there are some sellers out there. It's just that you need to discuss that with your realtor and help you find out which properties are available through seller take-back mortgages. The fourth fact or tip I wanted to discuss today is that some buyers are afraid that their credit score is not high enough for them to purchase. But if you can come up with more than the minimum down payment, or you can secure the loan with another equity, this can be, your credit rating can be overlooked by some lending institutions, and they will consider you for a mortgage. Either that, or like I mentioned before, the seller take back mortgage is an option. The last and final tip I wanted to discuss is that, of course, you should get pre-approved for a home loan before you go looking for a home. And pre-approval is easy. We did mention it last week. You can get pre-approval at no cost, no obligation, and it can even be done quickly over the phone. Other than getting a verbal, once the mortgage broker tells you that yes, you can get pre-approved, you will do a credit application and you get a pre-approval letter from the lending institution. These are the facts that I wanted to go over with you today. And again, if you have any questions, or you can get a copy of this presentation, or if you have any questions, please call me direct at 647-383-7111. Again, you can reach me direct or text me if you have any questions or need any more information about how to get a mortgage, or what programs that you can qualify for buying your first home. Again, 647-383-7111. If you need help, there's a certain neighborhood or location you're interested in buying in that, and would like to know what you need to afford a property in that area, please feel free to reach out at 647-383-7111. You can get a copy of this free report at www.teamferasriyal.com/stop_renting. It's on the screen, in the bottom of the screen, you can see it, and you can also fill out your information there if you need any more information. Again, you can let us know if there's any questions you have at this time. If not, you can call me at 647-383-7111. That's all the 5 facts I wanted to discuss with you today. I hope you enjoyed it, and I will be having more educational, more information about similar topics that we will discuss later on. Once again, thank you for listening and tuning in, and hope to see you again next week with another interesting topic.